Luskin, as you can see, I have changed my view in response to this money market backup. There's a lot of things in the air in this great Hardy-Boyer matchup, which I like a lot. It's very nice. Don, where are you coming out on this right now?
Well, I think all of you are looking at this thing a little bit simplistically, to be perfectly candid with you all. I think I had the opportunity earlier this week to meet with a couple of voting FOMC members, and I can tell you that they are all very, very torn by what they see as a very difficult choice in front of them. They understand that the market is throwing a tantrum and just begging to be bailed out. But what industry in trouble doesn't go to Washington and beg to be bailed out? Now, I don't know of any other area of life where you free enterprise people support that kind of thing, but all of a sudden when it comes to the stock market and the credit markets and the banking system, we have to have a bailout. Well, they're looking at an economy that, yeah, their official models say might, get a little weaker before it gets stronger, but then they're looking at the actual numbers and they're looking at anecdotes from their districts, and they're saying, hey, there really isn't actually all that much evidence of weakness. And it doesn't say anywhere in our charter that we're supposed to bail out banks and give them the business plans they wish for. We're supposed to just keep the economy going.
It's the problem in the short-term credit area that bothers me more than the overall economic story. But before we lose this
segment,
Larry,
why is lowering the Fed funds rate by 50 basis points going to make any difference to that?
Oh, I think it's going to have huge.
If investors don't want to hold asset-backed commercial paper because they're afraid of all the scary stuff inside it that they can't see because of opaque securitization structures, 50 basis points in the Fed funds rate isn't going to change that one bit.
Well, I don't think Don Luskin, Hillary's polls are going down. In fact, one pollster, John Zogby, we had him on last night, says she would lose to any of the major Republican contenders. Is it a coincidence on that news that stocks have been going up?
It probably is a coincidence, but it is a delicious coincidence, and I intend to savor it fully. It is a consummation devoutly to be desired.
What's your take on this? I mean, if in fact Hillary should lose, let's say to Senator Obama in the Iowa caucuses, only a couple weeks away, is that bullish or bearish?
It's so hard to say because, in a way, the best thing that could happen for the Republicans would be having Hillary run because she so polarizes people. But on the other hand, who knows? She's such a skilled, facile politician. Once she gets the nomination and gets the bit in her mouth, she just might pull it off. But you know what I'm looking for 2008, the big wild card? I just know for sure that Ron Paul is going to end up making a third-party run. He's going to end up being the Ross Perot. He's going to draw from both sides, and he's going to really upset this game. He's making this very unpredictable.
We're going to have to do something on that one. Gentlemen, I'm trying to process this, but let me ask you something, Quentin. Are you telling us that you're as bullish on gold as Don Luskin is?
I think this is definitely going to hurt the dollar, and gold is the refuge, yes.
All right, Don Luskin, I got you an ally out there in the
Dow, that's
Coast.
fine.
Yep, we need all the allies we can get, believe me.
Your Dow isn't worth as much.
Don Luskin, real quick, you bullish or bearish on stocks?
I am so bullish. We hit a disequilibrium on Monday's close between stocks and bonds. It's the largest in history. You have got to sell bonds. You have got to buy stocks. Doesn't matter what the Fed does. The values are way out of line. Just do it.
You got the last word. Don Luskin.